Hello ladies and gentlemen, welcome to our first webinar for the month of July. I'm Joseph Novichkov, Senior Trading Manager with GDM. It is a great pleasure again to be here with you so we can review some new advanced systems so it can help us trade better on the market. Before we actually start with today's topic, I just wanted to review a few of the previous systems we spoke about. One of it was the linear regression mid to long-term trading. It was actually a very good system that we've used also to trade the conditions that UK are in right now, speaking of the Brexit. Also, another well-performing system during the Brexit experience, we've been using our so-called advanced systems from our past webinars. So one of it was, as I mentioned, the linear regression. The other one was with the parabolic support and resistance, along with the combination of other indicators. Basically, we're right now compiling a small video that will get you familiar of the systems that you could have used during this particular moment of uncertainty. And of course, it will also give you an idea how we were prepared for that particular move. Another thing I wanted to mention is there were a lot of phone calls during that time of uncertainty here at the office. Everyone was requesting some kind of prediction model on this particular event. However, what I kept saying in all the cases that we've had so far, like, you know, we've been here for so long on the market. Most of you here, guys, have been here since the beginning of the office, and we've been trading through, you know, the latest, the Brexit. Before that, the U.S. interest rate hike. Also before that, the quantitative easing during the campaign of the previous Fed Chair Ben Bernanke. During, of course, all of these years of market uncertainty and market crashes and so on and so forth, so everyone can see that what we do here at the office is strictly for you guys. Now, the video, as I mentioned, that we're compiling will reveal a few of the past several months of webinars, as we have recommended at the beginning of the year a few systems that would work very well in the first few quarters of this year. So I will also get back to that case with that video presentation. It's going to be exclusively made and posted in YouTube and also in Facebook, so you can just comment, rate, or just whatever you do, you want to like it. All of these videos, it's probably going to be a series of them, as it's going to be a case scenario for the next events that we're going to witness throughout the whole year, the rest of the year. They review a few speculations that are going on here at the office of what might happen next with UK, also within US, and the expectations of further rate hikes. Also possible rate decreases from the back of UK. All of these things we will get you familiar during the course of our webinars. And all of the webinars, as I mentioned, that we're doing are in time with the market conditions. So that brings me to today's topic. And not only today's topic, but this particular month that we're in. Now, we're getting into a month where volatility and liquidity is at high levels. Why is that? We're getting very close to the month of August. This means that most of the market participants would be probably out on vacation. Most of the future contracts are expiring at the end of August, at the end of September. So during the time period, there's going to be a lot of volatility, a lot of liquidation of some hedge funds assets or whatever. All of that will bring a lot of money and a lot of volume to the market. Therefore, mid to long-term systems are also going to be working well, but we have to be also prepared to make money on smaller time frames for a short period of time. Therefore, this month's particular webinars are going to focus mostly on scalping. When we talk about scalping, I'm definitely not going to focus on something lower than 5 minutes because it's too risky with low potential of certainty. Therefore, something larger than 5 minutes gives us a little bit more, how to say, confidence, and it's going to take out the psychology out of the picture, which is pretty much what we're trying to do here with the technical trading and all the analysis that we do. So today's topic, ladies and gentlemen, will focus on a dual support and resistance parabolic scalping system, which is going to focus roughly on 5-minute chart time frame. There is actually a lot of ways, there are a lot of traders that are using this particular system by combination of different, how to say, indicators, something that gives them more confidence, something that gives them a little bit more certainty, let's say, or there is a way to use it which is a bit more aggressive. Of course, with that we're lifting up a little bit more the risk along with it, but therefore we're doing it with higher profit potential. We're going to go through a few scenarios here so we can take a look on how we can use that particular way of trading. There is a speculation on both support and resistance parabolics on their parameters. However, I have considered the most appropriate way to approach it is to change it so both of the parabolics can actually look something like moving averages, but they will be much faster than the moving average and give you on-time trading signal. How to do that? First of all, we got to start with a few things that are absolute must to our chart. Something that we always have to be aware of. This is the exponential 200 period moving average. I will just place it on the chart. This is by default to all my charts something that I have to have. And as you can see, I've chosen today the Euro USD 5-minute chart. I've chosen the Euro USD because it's in a very, very tight sideways range, and it's very useful when the market is in, let's say, a short-term to mid-term sideways range. This gives us a very, very good opportunity on the small time frames to make as little mistakes as possible. I've been talking about this particular way of trading on one of our first webinars. It was like 3 years ago. I don't know if any of you remember that, but you can also check that webinar. It's quite a long time ago, so you might not be able to find it throughout the hundreds of the webinars that we've made so far. So just send us a request on our email address if you wish, webinars@gdmfx.com, or you can just make a request directly to our chat directory on our website, where the support department will kindly refer to us on your request. Or if you have any kind of urgent matter that we need to attend to, just call us directly on our lines and you will get in touch with us as soon as possible. Getting back to our system today, ladies and gentlemen, we have to have our parabolics. Now, for the fast parabolic here, as you can see, I have made a step by 0.01 and a maximum of 0.1. Now, all of these things I'm not going to cover as to due to the fact that we've been talking so much about the parabolic support and resistance indicator that I'm actually going to start crying from so much repeating in myself. So the style, that means the color, I'm going to choose red for the simple reason because it's fast. I just need to see it, I need to notice it, I need to know that this is the fast one. This is how we have it. I might even thicken it up a little bit for you, so maybe you can see it better if you have a smaller monitor. This should be much nicer. Now for the second parabolic, the particular settings here, the only one change I will make for the slow support and resistance is that it's going to be a step of 0.02. The rest will remain the same, only I will change the color so I can better see it. Now, as you can see, those two indicators are overlapping on some points. Okay, they're getting crossovers. Sometimes they're much further away from each other. But what we need to notice here are the particular moments on where we're focusing to trade. And let me get a better color here on my pen. The trades that we're interested are those where our parabolics are overlapping. This is over 80% certainty of direction because we have a slow parabolic support and resistance and fast parabolic SAR. But in the cases we see a distance of such sort, like from here to here, I don't think I've chosen the best color. I think I should change it to something much more lighter. Yeah, I think that one will work. But let me use, let's say, light blue. I think that would be better. Okay, as I mentioned earlier, those are the cases where we're using the parabolic when they're overlapping, and those are the cases that we do not use this particular signal. Why is that? Okay, let's start measuring. The first thing first. I know, guys, that you are very anxious to ask a lot of questions. I will cover all of this in separate emails if, of course, they're not, how to say, in line with the topic. But, of course, more than the important things I will repeat one more time when the time comes. So whatever questions you might have, just drop them in so you can forget about it, and I'll get back to it as soon as possible. As you can see, the two parabolics are expanding on the pace of, let's say, like 2 moving averages. To be honest with you, I've never actually heard of anyone using it this way, this particular way of trading with 2 parabolics. But for me, on small time frame, scalping with 2 parabolics, let's say if I have an account where I can trade each time with 1 lot, at the end of the day, I'm usually walking away, let's say, with at least doubling my account, which is a pretty big profit for one day. Of course, the exhaustion during the whole process is enormous, but that's up to you to decide whether you want to trade it or not. So let's take a look at what the parabolic is doing when it's giving us the right conditions. So from here, we have an overlapping parabolics, or 2 of them are virtually a few ticks or a few pips away from each other. And our signal comes over here. Now when we're scalping, we're always aiming to enter the huge lot and to close it on a small pip profit. Let's say conditions in this case are 5 up to 8 pips of profit with a stop loss of about 15 to 20 pips, depending on the size of your account and of course the money management system that you're using. But if I have to aim for the most conservative way for 5 pips, as you can see, the first 5 pip is hit even on the next session. 2 5-minute charts, 2 5-minute candles, and we have about 5 pip of profit. This with one lot is $50. That's $10 on a pip. $50 for 5 minutes. Okay. Then we're waiting for the next signal. It comes over here on the next overlapping. Okay, we're measuring another 5 pips, for example, to the upside. The next take profit comes about 4 sessions after. That's in 20 minutes time. So for another 20 minutes we have another $50 of profit. But then we're getting on this situation here where the two parabolics are very far away from each other. That means, ladies and gentlemen, that the fast parabolic is pointing us a direction from the beginning of the dots here of the parabolic, but the other one, which is a slower one, starts way over here on the bottom of the whole movement. So if we have to enter here, 5 pips are just a few pips, a few ticks away from our target, only to hit our stop loss at some point. Now, if we have set it correctly, I would put it on 15 pips, like here, for example. That's 3 times the size of my profit. I would probably hit my profit way over here. So that's a long time. That's 49 sessions. Now, if I have to wait around, that's what, 4 hours. That's a little over 4 hours to make $50. I wouldn't really use that particular system because the market is so fast, so choppy that my psychology is definitely going to break throughout the whole 4 hours, and I will probably close it on a loss rather than wait for 4 hours. That's why keeping these conditions in line are going to keep you away from trouble. Always trade when they're overlapping or they're just a few ticks away, like these conditions here. I'm going to measure the next ones as well, as you can see. And this is present time. I mean, this is during the whole morning is what happened. Further on down the road, I'm going to talk you through some more profit takings and stop losses, so you can see how you much more can benefit from all that. But right now, this is the more aggressive approach from where 1, 2, 3, 4, 5 situations you could have, so far from this morning, could have profited about $250 in a matter of a few hours a day. And of course, that would be the whole case without any loss. Now, if you have taken some of these other conditions, like this one, or like this one here, that would probably give you another 4 times losses, which is going to equal at $150 by 4, that's $600. And if you take away from that 600 the 250 you actually profited, so you're actually going to go out with $350 loss rather than a profit. My interest in this system is because it protects me. Now, from here we saw that the whole profit comes here. Okay, that probably would have somehow, eliminated the other 3 particular conditions of losses. But what if this one was a profit and we take another situation like this one? Okay, this is around 4 pips up to the top of this candle shadow here, and I'm not even getting into spreads or floating spreads, so on and so forth. Then another 5 pips are coming way over here. Okay, let's say we've taken a second one, but what about the third one? It comes here. We take a profit. The next one comes somewhere around this candle here, and we know that it's bullish, we see the trend is picking up, nowhere near it, and straight off to 100 to about 15 pips of loss. And that's only a case from just this morning. But if we have to just go slightly backwards and start seeing the same conditions here, you see, this one, probably. But there are going to be cases, ladies and gentlemen, where you will lose from this position if you're trading conditions like these on the parabolics. The most appropriate and the best way to trade it is where they're overlapping like this one, or let's say they're a few ticks away, like this one, this case, and this one here. You can of course start following it on your own trading chart to measure for yourself to see how better it is if we let go of these particular cases. And this is only one currency pair. So if we consider the past 2 days of trading, and that's a sideways range, ladies and gentlemen, but we're still trading the small trends on that 5-minute chart. We are still walking away with about, let's say, $500 for 2 days with one lot trading all the time. Average, let's say, to trade one lot, your account should be about, what, $1,500? That means 1/3 of the size of your account you have made it for 2 days. And for another 4 days, let's say, one trading week, you have doubled your account. What about at the end of the month? And we can understand that with what we know so far, each time your account grows, your risk and your investment in each position grows along with that. So everything is expanding exponentially, and at the end of the month your profits are not going to be just doubling your account, but probably even making it 10 times bigger. However, let me warn you about this system. It seems to be an amazing system, a holy grail, would you put it? But one thing is for sure, when you keep trading with this for about a week, you will be totally brain dead. First of all, the exhaustion that you will receive will be of such level that you might not be able to even look at another screen anymore for the rest of the month. So it's up to you to decide, and of course to consider what type of trader you are. Can you handle the pressure, because the market is very volatile in small time frames. You can see how fast the price is changing as we scroll throughout the chart. All of these conditions are extremely important to be considered and not to be ignored. Now, before I move to some more recommendations for peace of mind, an important question came through some time ago, where one of our traders was asking about the particular input of the parabolics. So let me have it on the screen here, so you can just go on, put it down. Support and resistance 1. Something is wrong with my mouse. It's drawing on sideways. So we have 0.001. Was it like that? I think I'm wrong. Let me check. Yeah, it's actually 1 0 less. So support and resistance 1 goes at 0.01 to 0.1 periods. Support and resistance 2 goes on 0.02 to 0.1 parameters. And this you can mark as fast and of course if you want slow. Whatever you choose, colors, inputs, you know, thick or not so much, up to you, depends on how you like to see it. Now for me personally, if I'm going to trade with this, and I will pay not so big attention to the candlesticks, I would definitely use a thicker one. If you want to focus more on the candlesticks and less on the parabolic, I will of course use it vice versa. Thinner dots, so it can be much more clear on my chart, but that's up to you to decide. Now another way to take profits and to be to consider it as a more conservative way, as we know that we're trading trends, ladies and gentlemen. One of our best tools on a conventional levels to be used as reassurance, another measure of certainty, that of course is the MACD. Now here, however, the input should also be on small levels. The appropriate one is 5, 8, 9, and 9, and this is what we have. Now what I mean by using that that particular moving average convergence divergence is, as we know that we're using the two parabolics as pretty much the same way. They're also pointing trends. The MACD is doing the same. That means that we don't really need to consider the peaks here rather than the crossovers of the zero level. So as you can see there, they align with the slow parabolic, but when we have them here on these conditions, now we have another certainty of direction, and we can also increase our pip size this way. Now, I see another question here which starts bothering me for some time. I understand that you might consider using different settings here with the particular indicators. That's up to you guys. I'm not really urging you to use whatever that I'm showing. I'm just giving you my idea on the matter. The way I've been trading for so many years with this system on volatile markets in small time frames. So whatever you consider that it's right for you and it's much useful, that's up to you to decide. Another case we have on this condition here, as you can see, our dot starts appearing directly after the MACD and its histogram breaks down the zero level, and here on the slow we also get a very huge bar giving us full direction of downside, and we can even trade down to here. That's a little over 20 pips, give or take. That's $200 for 15 sessions on one lot traded. Same condition here. Therefore, we would be able to even catch the full move. I would definitely exit on the way the histogram starts decreasing, as you can see down here. Every time we make a smaller bar, we are definitely going to see decline in price. Not right away, of course. The MACD is a little bit of slower indicator, but I better exit, let's say 4 pips earlier instead of get 10 or even more pips less if the price decides to reverse extremely fast, as we're looking at a very small time frame. So this is another way that you can take a look at the market, be a bit more conservative, wait for some longer time frame. From here to here is about 28 pips, give or take 2 pips with the shadows. Let's say about, again, 20 pips. That's, again, 15 sessions. We get about $200 of profit. But at the end, both of the ways are pretty much going to make you average the same amount of money at the end of the day. For a very simple reason that with one of the cases we were making more positions with less profit. On the other hand, you're making less positions with larger profit, which equalizes at the end of the day, but it really depends on how you would like to look at the market, because once I mean that these conditions here are pretty much perfect, but we have conditions that might not meet these criteria. Let's say this case might appear over here on the bottom of this histogram, giving us false signal. So basically this move on the more conservative way, you will actually ignore it. Therefore, the more riskier way might even get you even further down the road, closer to your objective rather than the more conservative. But this is always has been known on the market, that the more conservative way gives you a little bit more peace of mind, but less cash at the end of the day, rather than a headache with huge profit. But of course, health is always something that we have to consider, as we're not machines. We cannot really change parts if something burns out, especially when we speak about the brain, because you really can't swap it out. Now, speaking of the moving average here on the MACD, this is something that you can either remove with the changing of the colors on the background so you don't see it, or just ignore it. I particularly would ignore it. It doesn't really matter in this case, because what we need is the volume and the volatility here. And this is the volume, pretty much what we're seeing on these histograms, ladies and gentlemen, and direction. That's what we need. That's all about the system itself. We spoke about a few other ways to take profits, a few other ways to take stop losses. Also, here actually I forgot to mention, if you're using these histograms on the MACD to as a further reassurance of direction and strength, you can also use pretty much the same method of about 12 to 15 pips of stop loss. That will also guarantee you a much larger profits rather than losses. However, one more time, this is up to you. This is a recommendation. It's not a trading advice. Therefore, you can use it as much as you want, or if you want to use it at all, that's up to you. Next time, we're going to focus on something else, on another system, but we're going to go on a larger time frame, so we can cover everything from 5-minute up to 30-minute charts. Of course, we're going to go even one more time back to 15 and 5 minutes on our dual time frame scalp trading. So all of this throughout the whole month of advanced series. That's all for today. Whatever questions you've had, just drop them down in the chat. I'll answer as soon as possible. If you remember about something later on, just go on our website, GDMFX.com, find our phone numbers, or directly on our chart and ask your questions there. I'll answer as soon as I can. That's all for today. Thank you for joining us. This Friday, more to come. See you next time. Bye-bye.